Good enough. Come on. There we go. Okay. See what other current events I saw that I want to talk about here. There's a couple more plane crashes. I just stopped posting them. There's like two or three more plane crashes. And I was watching can't remember his name, but there's a social media influencer. Um can't remember his name, but he basically was trying to take a flight somewhere, and the pilot had to come on the intercom and say, "We can't find the runway." And they tried three different times to find the runway, and when they couldn't, keep in mind they're at the airport trying to land, but because they couldn't find the runway, they had to divert back to another. He was trying to. I think they were trying to land somewhere in like Lake Worth, in somewhere in Texas. When they couldn't land in Lake Worth, make this make sense. They had to go back to New Orleans. Now, I understand what that means because I'm from that area. I used to live in Baton Rouge. I was born in Baton Rouge, and I used to live in Houston. So I know that basically those are the two closest airports. But if there's any problems, with the airlines, the closest airport to Texas is New Orleans. So they had to divert all the way back to New Orleans, and he had to drive back to Lake Worth. But my point of telling you that story is to let you kind of understand how the airlines are right now, and that's a good story that they had to turn around and go back because it could have ended a lot worse. At least the plane didn't crash. But do not think that the plane crashes have stopped, guys. They're just not in the news. They are still understaffed. Now, I saw a article on that was it Congress or was it a judge? I don't know who stopped it, but the executive order on firing everybody, I think it was a judge that determined that that was, illegal. Which I did tell you that these executive orders that Trump is signing, some of them are not. They're not legal. He's writing executive orders that break the Constitution. They break the balance of power between the three branches. So just because he signs a piece of paper, but that's the craziest thing is that people still react to these executive orders. But they say that a lot of the people that he fired may have to get rehired because they were fired illegally. But as I've said, we just sit back and wait. Sit back and wait to see exactly how all this plays out. Can you imagine the amount of wealth? That's something else that I kind of want you guys to kind of focus on. With the mass sell off, think about this. With the mass sell off of all the tech stocks, the whole stock market, basically people are getting their wealth that they've been building for years. The institutions are taking their profits from 2023 and 2024. So what they're doing is if there is going to be, and I think there may be new people in the room, so let me explain that again. There is a video that I posted yesterday where a guy explained that after all of this kind of plays itself out and we get that recession, we get the correction, we get the crash, whichever one that comes, what it's gonna do is create a new accumulation phase. The market is gonna reset. So there's going to be this accumulation phase where we are where the institutions and the corporations are buying up everything, all the bankruptcies, all the companies, the mergers and acquisitions. There's going to be a lot of assets that can be scooped up at pennies on the dollar. So here's the question: if that is the eventuality, these corporations have to have the liquidity to be able to buy those things. And where do you think they're going to get that liquidity from? By selling off their profits now. There are billions of dollars that are being sold off in the markets. And they're going to use those billions to buy everything that's left over after this correction or crash happens. I'm still not sure we're going to go through a recession. But I told you guys this as well. Any movement in the markets, they're going to scream recession. And I'll tell you, and we're gonna kind of go over that today in our master class. We're gonna go over today's worksheet. But in that worksheet today, it's gonna fall in line with what I'm explaining. If you ever want to figure out if there's a real recession coming, just listen to the Fed. If Powell is not telling you a recession is coming, a recession is not coming. And what did Powell just say over the weekend? He confirmed, he doubled down that we have a strong economy. And people are still fearful of a recession. But this is the echo. This is the noise that they immediately want to put on the news. And I'm telling you, it's the first thing they pull out. It's the first sword that they pull out of their bag. Recession. This is the best way to breed fear, to inject fear into the markets. We're not close to a recession. Just listen to the central bank. Listen to the Fed. He will tell you. Because here's another thing. In order for us to get to that point of recession, something has to happen with the interest rates. Well, let me say it a better way. Something has to happen with the inflation. Inflation has to go back up. So we have to get an announcement. The CPI report has to be really, really bad. So, like I said, just wait. Wait for the next economic reports to come out, and then just watch and listen to the Federal Reserve. Powell will let us know if a recession is coming. It doesn't just show up out of nowhere. So stop listening to the echoes and the noise of the markets, because that's the first thing they're going to tell everybody. Ooh, recession. I could not imagine being a investor or a trader in the markets like everybody else is doing. Couldn't imagine. It's too stressful. Listening to every little thing that comes out on the news and trying to react to it and factor it in and to analyze it. Dude, I would commit Harry Carey, if you guys know what that is. There's another word for it. Let me see if I can find it. The ritual itself. Let me see if I can find out what it's called. Japanese um Harry Carey. Harakiri. There it is. Seppuku. That's what it's called. I would commit seppuku. Just end it. I don't know how these people do it, man. I'm so glad that we have an entirely different way of trading. We can sit back. We see all what everybody else is doing, running around with their following other people, listening to everything. That, oh man, I couldn't imagine. Could not imagine. But we can see everything for what it is. We're looking for let's look at that real quick. Let's look at the S&P 500 because as I said, we need the S&P 500 to go down to about 45, and it's almost there. Remember yesterday I was at 47. I said it needs to go down to about 4,500. It touched 40. I'm sorry, needs to go down to 55. Well, it touched the 55.60. So let me I should have put it in a note somewhere. Well, we can do the math real quick. Let's look at the math. I can show you what I did. So let's look up S&P 500 52-week high low. I can walk you through what I did yesterday. So the high low, no problem. I can get it from right here. 61, 47, 50, 43. Give me a second, guys. All right, that's better. That's something going on with my plumbing. All right, so a lot better. I can. Hopefully that background noise you guys can't hear it anymore. All right, so we take S&P 500 6147, and what we're doing is we want minus 10%, right? So 55.32. If S&P hits 55.32, that is the correction for the S&P 500. And right now it's sitting at 50. Well, it bounced off of 55.60. So it's only 30 points away from a correction.
Are you sharing your screen?
Thank you for that, guys. So many moving pieces. Give me a second. So let me walk you through it again. So I searched for S&P 500 52-week high low. And let me actually find a market that I can show it to you. Let's go to Market Watch. And I believe it's like 61. Oh, here it is. 61, 47, 43. Right? So that is the high. That's a 52-week high. So we're going to take the 61, 47, 43, and we're going to minus 10%. 10% would be the correction. So the correction for the S&P 500 would be 55.32, 55.33. Right now, if you look at the market fell to about 55.60, somewhere in that range. So if the market falls again today, it's sitting at about 5,600. If the market falls about 100 points, we're going to get, or even about 80, 70 or 80 points, we're going to get the correction for the S&P 500. We already got the correction for the NASDAQ. I hope this makes sense.
So this is just a nice way that we can go to each market to see if the correction is coming. And as I said, we want a correction on all three markets. They're forcing a correction, and we are due for a correction, which is why we're focused on it. But let's again go back to the Dow Jones, because the Dow Jones does, there's a lot more that has to happen with the Dow Jones. The markets fell 900 points. I already showed you that. For those of you that are new into the room, the 900-point drop was because of Trump's response to a reporter. The reporter asked him, can you see a recession? Remember, that's the first thing they're gonna try to talk about. Do you see a recession in the future? And he says it's too early to call. I don't like to predict things like that. And because he did not answer the question, and he's right not to answer the question, because there's no recession in sight. But because he did not give a definitive answer, once again, the markets ran with it. Oh my goodness, we're going to get a recession. And the markets fell another 900 points. But the point of that is that the Dow Jones, when we added up yesterday, is only sitting at about 1%, maybe right now 2%. So let's go look at that. Let's go look at the Dow Jones 52-week high. And let's see if we can do the same thing. I think it's 40, it says here 45,073. 45,073. Give me a second. We basically want to put that in minus 10%. So the Dow Jones has to fall down to 40,566. And right now, let's go look at the Dow Jones. Right now, the Dow Jones is sitting at 41,600. Well, it came down to 41,600. So the markets have to fall another 100 points. No, another 1,000 points. Well, no. 45. Yeah, another 1,000 points. So if we get another day like yesterday where the markets fell like 900 to 1,000, we'll get a close to a recession. I'm not recession. We'll get a close to a correction with the Dow Jones. But we need another 1,000-point drop. And the way that the markets are moving, we are going to get it. I just want to monitor this and show you guys exactly how this works. They're trying to force a correction. And then after the correction, I've showed you, we even went over this at this weekend webinar that just passed, because the recovery for a correction can be anywhere from 30 days to 3 months. Anywhere between 1 to 3 months is how long it takes for the markets to recover. So it's not like that, we're so far off. Because think about that. Even if we got the correction, that's still nowhere near a recession. The markets, do corrections all the time. And that's the other thing about a correction. It doesn't stay, because 10% is a big difference than 20%. The only way that we're going to get to that level of a 20% if Trump keeps doing this back and forth. He's going to frustrate the market so much that it's going to cause a crash. But for now, we're nowhere near that right now. The numbers don't tell us that we're anywhere near a crash or a recession. Right now, we're just trying to confirm 10% drop. And like I said, 10% is a long way away from 20%. So you guys have the ability to monitor this on your own. 52-week high, 10%, and then just see if the markets will give you that amount. Um, how is crypto doing? Let's see how bad crypto's doing. Such a such a contradiction. Crypto equities. What the heck is a crypto equity? They just make things up, man. What the heck is a crypto equity? That's a contradiction. Bitcoin falls another 6.5%, guys. It's not going to stop. Now, let me also give you another reason why. It dropped down to 77,000. But let me show you another reason why I'm monitoring Bitcoin. Because right, I don't do Bitcoin, right? We don't do derivatives. We don't do unsafe. We don't do casinos. The reason why I am looking at Bitcoin is because for two reasons. And once again, this is something that we're going to explain in today's masterclass session. You have to look at the participants on what they're doing, what their sentiment is, how they're moving, where are they going, what markets are they going to. And when crypto falls, where do you think these people are going to come? The institutions, where do you think they're going to come? The disgruntled crypto heads, where do you think they're going to come? They're going to bring all those bad habits and all that bad sentiment over into the equities. The ship that they're on is leaking. It is sinking fast, and they're going to jump ship. But where do you think they're going to go? They're going to go over to options. They're going to try to come over to the equities. That's the reason why we monitor. And I've even seen reports that a lot of the investors are going over to the foreign markets. They say that the U.S. markets are just way too volatile, too unpredictable. You see safe havens. A lot of them are going into safe havens, kind of waiting to see if the markets are going to calm down. So there's a lot of movements. There's a lot of participants, a lot of groups that are kind of going to different places, and that is literally what today's lesson is in the masterclass. Surveying the participants. We're going to show you that a little bit later. But if you always wonder, like, why is Aaron monitoring crypto? Because I want to know where they are. And the thing is, I want to stay as far away from these people as possible. They're just going to make the markets more dangerous, more unsafe. They don't know what they're doing. They're following other people. They're not going to look anything up. Let's see how GameStop is doing. I told you guys what to look out for. I says when crypto falls, you're going to see GameStop and Tesla fall. We see Tesla has fallen by half. Let's see if GameStop is also fallen. See, they're even calling them meme stocks. This is what I mean. They even calling them meme stocks. I've never heard this word before in my life. But they're saying that these stocks are not real. They don't have value. AMC and GameStop are meme stocks. And it's telling us that they're falling. Come on. Let's find another article. Has anybody ever heard of meme stock before 2024? They're borrowing the vernacular of crypto, and that's how you know that they're connected. GameStop subreddit fills with store closure posts. So stores are closing. Remember I said that GameStop is going to liquidate 401 stores will close in January. They just closed 400 stores of GameStop. Dude, I love when I predict everything correctly. I absolutely love it. What did I say was going to happen? I said when you see crypto fall, you're going to see GameStop and Tesla fall with it. Boy, if I'm not correct, I don't know what is. That's hilarious. Double the stores have closed in 2025 in 1 month. In 1 month, they closed more stores in 1 month than all of 2024. But as I said, we knew GameStop was fake because I was thinking about it. I'm like, wait a minute. They were shorting GameStop down to zero. How is GameStop still alive 4 or 5 years later? Right? They were shorting that back in 2020 during the pandemic. And I look up 5 years later and GameStop is still alive. I'm like, wait a minute, what's going on? I said those crypto heads are still in there. And sure enough, they're calling it a meme stock. I've never heard that term before in my life. But it lets you know that crypto named it. The crypto heads named it meme stock. I love when my predictions are right. It means we're doing it. It means we're doing it the right way. All right, so I think I'm going to go ahead and do today's presentation. If you guys have any questions, if you guys have seen articles, any commentary on anything that I've shown, otherwise I'm going to go ahead and go into today's presentation. I saw this article that Trump's media company, Trump Media and Tech Group, has lost half its value. But I don't think that that's a concern because his money is not in his media company. His money is in his Liberty. What's it called? Liberty, World Liberty Financial. This is where Trump's real money's at. World Liberty Financial. Because I want to show you why this makes sense. Because he used to be a real estate mogul, right? But they took all his real estate away. Well, he took his own real estate away. But he can't own the property in New York, and that was his main bread and butter. And then all of his properties around the world are going bankrupt. Projects that were being built are being shut down, denied access. So he can't be a real estate mogul anymore. So he transitioned over, with True Social and all of this. He created the Trump Media and Technology Group. But once again, coming into the inauguration, he knew where the real money was. If he wants to be up there with the hundred billionaires, he's either got to do it through technology or through crypto. but I ran across this article and thought it was interesting. He's losing half the value on his media company, but this is not the problem because he is heavily invested in crypto and controlling the market every single day. All right, guys, let's go ahead and go into today's presentation. And like I said, that's kind of what we went over, like watching participants, surveying, seeing what people are doing, how are they trading, what is their sentiment, what are they thinking, what are their strategies. So let's show you what this looks like. I'm obviously not going to go through everything, but you guys can get a kind of sneak peek on what the students in the masterclass are going to get today. So this is the next worksheet. We're going into survey, and I'm going to definitely go over what the participants are, and then I'll give you a sneak peek on what this worksheet is giving you. So basically, with the survey, let's go ahead and read it. What it says: it says knowing who you're trading against in the markets is an advanced strategy. But once learned, it clarifies whether the markets are unsafe, too volatile, heavily manipulated, or unpredictable. Now think about those: unsafe, too volatile, heavily manipulated, or unpredictable. Think about the opposite of those things. So by identifying those things, you will be able to eliminate trades, decide not to trade, stay out of the markets when you don't have protection, power, precision, and proficiency. That's what survey is going to give you. And the way that you learn that is you simulate. Take the time to learn the skill in simulation. You're going to survey the markets for 8 different groups that might impact or influence your trade. Surveying these groups will provide sentiment analysis on the direction of the markets, the volatility and momentum of the price action, and the level of confusion and uncertainty that they may have. The list provided is in order of the group's buying power and potential influence of controlling market sentiment and price action. So the first group that we want to monitor is central banks. And this we were talking about earlier, right? If you want to know if a recession is coming, if you want to know how inflation is doing, watch the central banks. All right, central banks such as the Federal Reserve have the most significant buying power and influence over market sentiment and price action. And we saw this last week or over the weekend when Powell showed up and said the economy is fine, the economy is healthy, the markets went up. Just listen to the central bank. They print money, their interest rates, their quantitative easing programs will inject liquidity into the markets. If you ever want to know what's going on, especially with the prime correlation of the dollar, it all starts with the central banks. We taught this to you earlier in the 30-day challenge. When we got into the prime correlation, one of the first dominoes of the dollar is the central bank. From there, we now go into institutional investors, such as pension funds, mutual funds, hedge funds, investment firms. All right. They manage large amounts of money and can significantly impact market sentiment and price action. So institutionals and investors, notice they impact the market sentiment of all the other groups, all the other market participants. Like it trickles downhill. So once again, you got to monitor the institutional investors because they are going to set the tone of what the market sentiment's going to be. As soon as they spoke, they're talking about recession. They're driving the markets one way. Monitor the institutional investors. They're going to give the market its sentiment, the overall sentiment. And we also know that they have the ability to manipulate that price action, manipulate that volume. All right. The third group is high frequency trading. And we kind of ignore this a little bit because we don't see it. But believe me, those trades that are happening at the microsecond level, it's also creating a lot of volume and a lot of volatility in the markets. So high frequency trading firms use sophisticated algorithms and high speed trading platforms to rapidly buy and sell securities. They can significantly impact short-term market volatility. The next group that we want to consider are market makers. This is another group that we really don't consider because they're a part of the makeup of the structure of the platform, right? They're kind of set to regulate the markets, but they also have the power to influence them. All right, market makers are firms or individuals that provide liquidity to the markets by buying and selling securities at prevailing market prices. So if there's not enough liquidity, if there are not enough participants, not enough volatility, if they want the markets to go one way or another, market makers can choose direction by buying or selling just to drive it that direction. I know that sounds crazy, but they make a decision on the direction of the markets and pretty much the volatility of how the markets are moving. And there are ways that we can, that's the whole point of what this worksheet is all about. We're going to get to that in a second. I'm going to show you how you can actually survey each one of these groups. So corporate investors. All right, that's the next group. Corporate investors, such as companies doing buybacks of their own shares or investing in other companies, mergers and acquisitions. All of this is how you're going to analyze corporate investors. All right. And through all of that, through the buyback of their shares, stopping their market from falling, stopping the index futures or the spot market from falling, by buying back their own shares, they prevent all of that. Looking at those mergers and acquisitions, which we're probably going to be getting in a few more months, all of this can impact the direction, the sentiment, and the volatility of the markets, seeing how corporations are moving. And believe me, we're going to see a lot of mergers and acquisitions in 2025. The next group to look at is retail investors, retail traders. All right. They have less buying power than these other groups that we just went over, but we saw what they did with GameStop. If they can come together, they have a lot of influence in the markets. And we see that even in crypto. They can influence and impact markets if they band together. Now, basically, these 6 groups are kind of their own groups. But the last 2 can be any of them. All right. So algorithmic traders and day traders can be any of these groups that we just mentioned. Now, I do want to mention that central banks do not trade the markets. They just influence. That's why they're at the top of the list. But once you start getting into the institution and everything else underneath, they're the ones that are actually, manipulating, controlling the market. So you have algorithmic traders using automated trading systems. Now, I do want you to realize that the high frequency traders that we mentioned earlier are not the same as algorithmic traders. They're similar, but the high frequency is taking it to a whole nother level. There are some people that don't have the infrastructure and the wiring to do their trades at microseconds. So there are a lot of institutions that are just putting in regular algorithms that are not high frequency. I want to explain the difference between the two. All right, but they can also affect the markets with their automated trades, and you'll see a lot of the algorithms traded usually around noonish, anywhere between 12 and 2, 11:30, 11, somewhere between 11 and 2 o'clock. You'll see a lot of algorithms running, and you'll also see algorithms running overnight. All right. And then lastly, you have day traders. Now, like I said, a lot of these previous groups a lot of them have a long-term time horizon. So most of them are long-term traders, but there are also the ability for them to be day traders where they're trading single trades, short-term trades, scalping, all of these things. And yes, you can still use algorithms for day trading as well. But the idea is to be able to go into any of these 8 different groups and know the sentiment. Notice it says survey these main groups of market participants to better understand their behavior, to anticipate their market sentiment, their strategies, their movements, their expectations, and response. So I'm not going to go into the actual groups and how to analyze them. I'll give you one. We'll show you the central bank. I'll give you this one for free. So if you want to survey central bank sentiment, you want to monitor their monetary policy, track their currency movement, right? We know currency strength and weakness compared to others. So we're kind of going into the index futures, seeing how currencies are tracking. You can analyze the bond yields, safe havens. Central banks may drive investors into and out of safe haven assets like gold and treasuries, even bonds. We know the 4 horsemen. You can study inflationary data, which we talked about earlier. You could observe market reactions to speeches when they give their monthly interest rate announcement, and then some of the governors and the local um, central banks in the U.S. will also give speeches and announcements. So you can monitor those speeches as well. You can monitor liquidity injections, large scale asset purchases. We know that they use bonds to buy and sell. Track global central bank coordination. So multiple central banks will do the same thing, especially if there's a financial or economic crisis. You can watch for policy divergence. And basically what that means is different central banks will respond differently. One central bank is focused on interest rates. Another central bank is focused on bonds, buying bonds, selling bonds. There's different type of strategies that they will use. All right. And then all of these different ways of surveying will allow you to simulate any of these events. And I'm going to give this one for free, but literally every single one of those groups, I give you 9 different ways that you can monitor every single group. And then the 10th one is to go and simulate it. This is a powerful worksheet, guys. It's a little bit advanced, but if you can take the time in simulation to learn the movements of all of these different groups, because here is the takeaway. Let's go back to our presentation over the weekend. We want to sync up with the rhythm, the heartbeat. You want to sync up with, because isn't that what these groups are? These groups have what did we learn yesterday? The divine oneness. You want harmonious unity. That's what these groups are. You want to see if there's harmonious unity with the central banks, with the investment firms, with the retail traders. This goes back to what we learned yesterday. And obviously what we learned over the weekend. That once they do sync up, there's a rhythm that they're going to bring to the markets. Any questions on any of this? You guys are going to love this worksheet. I'm going to post it when we get off of the live, but this is a powerful worksheet. 8 different groups, 9 different ways that you can analyze what they're doing, what they're thinking, what their strategies are. This masterclass is next level. You're not going to learn this stuff in the course material. That's why this is priced extra. I hope you guys are creating some kind of a database or some kind of a cloud folder where you can download all of these worksheets. But you can always pull these things back up when you're simulating in the future. I'm giving you everything you need for this entire 30 days. We're doing simulation, simulation, simulation. And I'm giving you all these worksheets for you to be able to simulate effectively. You're not just simulating to simulate. You have purpose, you have focus, you have goals, you have targets. This is what's going to elevate you as a master for the students in the master class. All right, guys. I want to encourage all of you that if you are interested in joining the masterclass, we're still only about 4 days into this. I know it's technically like 8, but the assignments, we're only 4 assignments in. And actually, is it 3 or 4? Yeah, simulation, safety, stealth, and survey. So yeah, we're only about 4 assignments in. We're still not too far ahead if you guys wanted to kind of catch up. I know I have 2 people that did inquire. I'm going to go ahead and reach out to you today if you guys are interested. But something that you should have learned in this last weekend's event, I don't want your money. I want your success. All you got to do is tell me you want it, and then we can make arrangements. All right, guys, with that said, we're still staying out of the markets. And I'm telling you, we see everything. Every day we see another bottom out, another bottom out. Stay out of the markets. Let it finish. I'm showing you that it's going into this correction. We're going to get that correction probably today for the S&P 500. All we're doing is waiting for the final correction for the Dow Jones. We need another 1,000-point day. And if we don't get it in one day, that's fine. We may get 1,000 points over the rest of this week. We may go into Monday with a correction. Right? So just monitor that Dow Jones and see if we get another 1,000 points. If we get that by Friday, we're going into Monday with the correction and basically for the entire stock market. It's going to take a little longer, which I explained for the Dow Jones because it's only 30 companies. But just monitor the drops. All right. We've already got the NASDAQ correction. We're probably going to get the S&P correction today. And probably by the end of the week, we're going to get the Dow Jones correction. And then once we do that, as I said, the market recovers typically in about 1 to 3 months. So get your money right. I've already proven to you that the value is still there. That this is basically the blood in the streets. This is a perfect time to buy. The fifth industrial revolution is still in play. The AI war, the competition of the AI war is still in play. We're just letting the market discount. And that's going to allow us to make a whole lot of money as the markets go back up to its original real value. Because that's the thing. None of this is real. It's manipulated. The value is still in the markets. They're just taking profits. I hope this makes sense. Don't feel antsy because you can't trade right now. Get yourself right. That's why we're cocooning. We're preparing for when that market is ready to take back off. And I think it's going to be 30 days. I think we're going to get back the market that we had probably in about 30 days. But like I said, it happens anywhere between 1 to 3 months, 30 to 90 days. And we can literally ride the markets back up over the next 30 to 90 days. A lot of money to be made coming up. So get everything right, get your mind right, get your focus right, cocoon, learn as much as you can. Because the money's there, guys. This is what it means to be a day trader. You're out of the markets a lot more than you're in the markets. All of these other people are scrambling, trying to stay in the markets. They're not smart enough to exit and wait. I promise you, the institutions are in their safe havens. They're waiting. They're selling off, but they're also waiting. Hopefully you guys see the benefit of the curriculum that we're learning. All right, I'm going to go ahead and get off of TikTok. Thank you, Joe. Thank you, Sylvester, for showing up, guys. I really want to get you guys somewhere into the classroom. So if you're interested, let me know. I can get you in. You just got to let me know you're interested. If I don't see you guys in the WhatsApp, I will see you guys bright and early around 7:45 on TikTok. All right. Enjoy the rest of your day, guys. And we'll do the same thing for YouTube. Give me a second. There we go.